Welcome everyone to the Q&A section of our show. If you have questions, go ahead and raise your hands, and then I'll call on you. Daniel, you're up. You're up first. Daniel,
Thank
go
you
ahead.
for all the information you've just shared, and thank you for the team that you have there. I've seen some of them before, and I think I've spoken to some of them before, but I never knew that you guys did what you do. I started building a team myself, but because you're a lot younger people, because I'm getting to be that age group where tomorrow is tomorrow and yesterday is gone. So today is all I have left. I'm not like when I was 40 years old. Every day was tomorrow. In the multifamily, in the real estate space, have you ever thought about doing ALFs or RV parks?
ALF, I'm not sure. Is that the RV park other name? Is that
assisted living
facilities.
Thank you. Sorry. Yes, we looked at both of them, and we believe that the high cash flow, because it's two businesses, right? You get the landlording and the operational side of it, but we shied away from both of them for the ALFs, because we don't have the technical expertise around that, and we didn't want to grow the technical expertise, at least today. And then from the COVID side, we didn't know how that's going to play out throughout and afterwards, so we kind of left it out from the ALF. And for the mobile home and the RV park perspective, what we saw is that for us to grow a meaningful size, 50, 60, 100 million, replicating that is tough. It is extremely profitable business for a geographically located area. Since we could not replicate the business model, we said, okay, we're not going to look at those two, at least for now. And that's where we shied away, both from the LF and also from RV park and mobile home parks.
What would someone need to do to start a business like that with you? Or is it possible to do that?
Yeah, I mean, absolutely. So we have partnership models. So what we have done, just like the Lego pieces, we have thought through some of the scenarios, how we can partner. If someone, let's say I'll go backwards. Every deal, we break it down in 5 different segments. First segment is deal finding, which is, the deal, underwriting, negotiating, putting the contract. That's one way to partner. Equity raising is another way to partner. Then asset management, another way to partner, right? Balance sheets, another way to partner. There's a lot of different ways we can partner, and we just have to willing to practice it out. So what we do is like reach out to one of us. We'll get on a phone call. We'll simulate scenarios, right? One of the good thing about deals is I have 4 or 5 different deals, different types of deals. When you run a scenario 5 times, you kind of sort of know whether you can come together or you're not going to come together, right? So Daniel, I would say we run a lot of simulations early on before a deal happens, pretending like there is a deal today, just to get a line.
Thank you very much.
Thanks.
Awesome. All right, Alex, you up next.
Thank you, Tim. Hi, Shariar. I wanted to ask you were talking about when you were raising capital for whichever one of your deals. And you were talking about how you first, at least if I understood right, you first start with your retail investors and then you go to funds, and then you go from there to institutional and brokers and that kind of thing. Is there a reason you go in that order, or were you just naming them in no particular order?
Thank you. It's the latter part. So those are 3 buckets, but we all start at the same time. Everything is continuous relationship. Like, let's say I have about 23 banking relationships that we manage directly with the local banks. We are managing them all the time. We have 6 or 7 broker shops. They do pref equity. We're managing them all the time, right? Sometimes knowing they're not going to do it, but we just do it just to see what the reactions are, right? And then equity raising is all the time. So there's no linear relationship that what first was second. We manage those 3 buckets all together with the 4th bucket, which is our equity raising partners, right? We run all the deals together with them, so they know what's coming in. So we are priming everybody at all time. Well, the whole message is, look, next 18 months will be bloody. It's messy. We'll be raising money from the folks who'll be losing money. One side is going to hurt, but the other side, we must be really, really excited, because this is a really good time to invest on multifamily because the pricing has calibrated quite a bit. So all of us, we look at everything together all the time.
Awesome. Thank you.
Yeah, and Warren Buffett says, "Be scared when others are greedy, and be greedy when others are scared." Right? And like invest when there's blood in the street, even when it's your own. That's a really hard one to swallow, but it is so true. Like we can't, I know a lot of operators and even capital raisers who have taken on deals that gone wrong, especially the deals in the last couple of years. And yeah, it's yes, you do have to manage the deals, and you do have to make sure you're executing the business plan and doing the best you can, but don't be stuck in those deals. You do have to continue to grow to take advantage of this upcoming market. Sure.
Yep, you need to keep on doing deals, right? Truth is, all of us took a haircut. Doesn't matter what we say. And whoever is going to come back on the other side by saying that I have done X, Y, Z, I have done my fair share, I cut my losses, but I'll make you tenfold. Stick around with me. That has to come out through, All
right. That's good. All right, Chris, go ahead, buddy.
Hey, Shariar, thanks so much for your time, man. It's been great. I heard you mention some industrial projects that you guys have looked at in the past. I was curious what your outlook is currently on industrial, and whether you guys are looking for potential projects in Texas exclusively or outside of Texas as well.
The outlook for the industrial and the retail for the Class A locations are still solid. And the reason being is solid is that not because, and I want to buy from the outside, it's because we own the construction team, so we can manage the risk better. And if I get a haircut, 5-10% on the price, that is fine. Construction team has margin, they can kind of fork it over on the other side. So for us, risk management perspective, that makes sense, right? And just imagine, instead of buying something at a wholesale market, trying to sell it on the retail, we own the manufacturing facility. So we just changed. So our outlook is still strong. We just bought 11 acres in Katy. We paid $1 million an acre, and one family office came, gave us $15 million, but that's Class A, solid, bulletproof, nothing to it, right? So we're looking at that. Then this thing, 10 acres is close to IAH. It is an industrial play. Price makes sense. Now it boils down to pricing and the margin, right? This property that we're buying, 10 acres, we're paying about $2 a square foot. On the flip side, we're paying $20 a square foot for that one. It all depends on the margin and the location, but we are still, as long as the numbers go around, we're fine. And from the construction perspective, most of our construction are Texas centric, and then we own GC license in Florida, Arizona, and Colorado, where we have assets right now that we're running, and we recently built in the last 24 months.
Okay. Are you guys looking at any like rezone and entitlement opportunities for industrial, taking stuff from ag to industrial zoning for development? Or are you trying to buy stuff that's already fully entitled?
And or if I buy, because equity is tough, right? Equity is tough. Return on effort has to make sense, right? We raised $18 million last year just because we had a hard bid. And with $18 million this year, we worked 10 times more than us from last time. So it is tough. So return has to make sense, and the risk has to make sense. This is not the time for us, at least for us. This is not, we felt like that risk in entitlement is quite a bit, and it takes a lot of time and money gets stuck.
Yep.
But if you can break the ground today, it's better. So we look at all of them, but the bias towards something is ready to go. And then we bring in the money to buy land. And if we're to buy a land, it has to be a really good price for us to come in.
Yeah. Okay, cool. Thanks, man.
Hi, this is Ozzy Khan. Are you able to hear me?
Yes, we can.
Oh, great. Okay, thank you so much, guys.
And obviously, you guys are related.
Yeah,
it's a big
same
family.
last name. Yeah, big, huge extended family. Shariar, what you've done and accomplished is amazing. I've been super inspired here, and I would love the opportunity to partner with you. I have 176 units in Dallas, 65,000 square feet of industrial space, and about 75 homes spread from Northern Virginia to Vegas and into Vancouver. And I'm going to start looking for multifamily again. I feel the time is right, like you said. For the next few years, will be a great opportunity. How much do you charge to co-sponsor a deal? I'm ready to sponsor the next deal myself. We do have about $5 million set aside right now as a down payment, but then the next deal and the next deal, I may need co-sponsors. So how much do you charge to co-sponsor a multifamily deal?
Short way of saying, we don't look at the world that way. We look at the partnership and how much value the partnership is creating, then we kind of go about it. So if you ask me, are you a hired gun to sign a loan? The answer is no. We don't do that. So we want to make sure that deal gets delivered. And for us to partner with somebody else, really, we think about it's a 5-year job. I want you to interview me. We want us to interview you. And we look at your time commitment, our time commitment. Then we look at the whole thing and say, you know what? Both of us got two teams. Both of us can support certain way. Both of us can add value, create the margin. We look at whatever the splits are. So statistically, first couple of deals, we did a lot less just to build the relationship. So deal number 3, 4, and 5, we are in a better place. But if you ask me just, are we going to sign a loan or do something? Answer is no. Because, it's a tough one, right? We want to make sure that all of our project gets delivered right. And all the deals, all the asset that we manage and all the asset that we help others to manage, one silver line again, where everybody knows they can run the asset, but when the time goes south, nobody has time. Dad shows up, mom shows up, kid shows up, family shows up, it just shows up. So it's a complicated way of saying it's a lot more get to know you, a lot more interview, a lot more simulation, and then we figure out if that's a team that we want to partner with. Same for you, right? So
Absolutely.
we're looking deals all the time. We're looking for partners all the time, and we're looking for long-term relationship. Another thing that we do at Massive is we have a lot of taglines that we don't do. If we don't see a way of doing deals number 3, 4, and 5 with the team, we're not going to do 1 and 2 because we're not in it for money, right? We'll make money. I mean, look, money is out there. There's the partnership with the people that we care for the most. So that's
long-term relationship. Totally agree. Absolutely.
Definitely.
That makes perfect sense. One other question: is there a standard ROI that you expect to receive from a typical multifamily deal, like a $20 million deal? Is there a minimum ROI you need to get from the deal?
I'll give you high-level ideas, right? I don't know, A, B, and C will be different. Then let's take a C for now. It'll be easier to kind of connect. So if it's a $20 million deal on a C project level, it should clear 23 to 25 IRR at a minimum very nicely, not without being too aggressive. So at the LP level, we can pay 17 to 18 IRR, and 5 is the spread for the GPs. So it needs to hit the low to mid 20s at the project level IRR very comfortably. And that implies coming in, you're looking at 6.5 cap when it as is.
6.5 cap. Okay, yeah. Sounds good.
So 6.5. That's where it's supposed to be.
Okay, wonderful.
And we're seeing
wonderful.
upwards to 7 also. So.
Yes, I'm starting to see that in Dallas as well. Those deals are starting to surface now, and I think it's just going to get better in more opportunities
one
next
thing
year.
I would say, look, if everybody knows everything and whoever has the money will come out buy it, right? I will put that word out there. What really it's kind of intriguing. I think last 2 weekends ago, we had a webinar. JLL came out and gave us a presentation. I saw one of those numbers about 6-7 months ago. As of now, just imagine as of now, we have almost 219 funds already ready with the 600 some odd $billion of dry powder on the sideline. So as when a deal comes in, they're going to come pick it up. One thing you know from the residential side, area that you own house or houses, when the next door shows up, you know the value of it. And whoever can pull the trigger first will win the game. It is almost like it. Deals coming in, but the good deals being picked up that you and I don't see.
How do the smaller guys like me get deals in multifamily?
No, you got to be in it. We're small too, right? We're just small, but we are big on the numbers. We have our friends and us running right now. We have 32 deals in the pipeline that we're looking at it, but we got to be in it where you are ready. If the deal comes in, I can pull the trigger right away. That mindset right now will get you ahead. So whoever is your teams are, just keep on simulating, sending out the LOIs as if you're buying it today at whatever price you want to buy it at.
Okay, one last crazy crystal ball question. When is the bottom of the market, in your opinion, in multifamily in let's just say in Texas?
Man, I wish I would know. I'll give a directional view of what we think. So we think that most of the loans are maturing or the rate cap expiring for February next month, all the way down to a year and a half. So you'll see them coming through just like a clockwise as you go. And what we do understand, almost all the deals that are underwrite well at that price. And then whoever wants to buy it, they're ready, just like you, Ozzy. They're just ready. So it's happening now. It's not being surfaced, but come February, it has to be. We're seeing most of the servicers are being more active. And we were seeing a lot of servicership. It's happening now on the back end. So everybody fought. Yeah. Now time is up. Time to give you the keys back. So it's happening now.
Interesting. Well, thank you, sir. Thank you very much for all your insight and time. So the best way to reach you to continue the conversation, is that through massive.capital.com?
No, so my email, I'll write it down. Shariar, my first name, at massive.capital, no .com. And then also what I would say, in our Wednesday calls, all of our team show up. We talk about the strategy. We talk about some of the stuff that we do. If you really want to get to know a little bit more, hey, you're welcome to come in and see us in action, what we do on a weekly basis. So,
Okay, I'd like to do that. So how do I get on the Wednesday calls?
I think it's on the website. If you go, there's a sign up
Okay.
page, or
Okay.
Massive Capital. I'll
Put it in the
post the
chat.
link there. Thank you. Thank you.
Oh, great. There's your email address. You just put it up. Okay, great. Thank you so much, Shariar. Very nice to meet you, sir.
Thank you.